Good noon to everyone. This is Dr. D. Kutika, Department of Commerce with Computer Application, Dr. SNS Rajalashmi College of Arts and Science. A warm welcome to my YouTube channel, Learn to Win. Today we are going to discuss about a very interesting topic regarding your stock market. As you all know, stock market is a part of your secondary market. That is, the market is divided into two segments. One is your primary and your secondary market. So before we understand about your primary and secondary market, we have to understand what is your investment. Why we want to invest. We are investing for the needs in a three category. One is to earn return on your ideal resources, and also to generate specific sum of money for a specific goal in your life, and also to make a provision for an uncertain future. So we have to go three golden rules for all the investors. One is invest early, invest regularly, and also invest for your long term as well as your short term. In your future, I'll explain to you what is long term as well as your short term. Kindly keep in your mind what is the three golden rules. I repeat again. One is invest early, invest regularly, as well as to invest for your long term and not to your short term. And where to invest, that becomes a very question mark. So this investment, it may be of two types. One is your physical asset, and the one is your financial asset. As you all know, physical relates to your land, buildings, that is your real estate, gold, jewelry, and commodities, etc. And financial assets relates to your banks, small saving instruments, and also your post of insurance, provident fund, etc. And also to our securities market, which is our topic, that is related to your shares, bonds, debentures, etc. So coming to the main topic, what is short term as well as your long term. Short term means your within your 3 years, that is your 36 months of time, whatever the term we are going to invest, but becomes your short term, that is your savings bank, money market, or which can be easily converted into cash, that is your liquidity or your liquid funds, and your fixed deposits with your banks. And also long term is your post office savings, public provident fund, bonds, mutual funds, etc. That becomes your long term investment. And why to trade in your stock market? As I told you very clearly, it is divided into two. One is primary, another one is your secondary. I'll give you a deep explanation about your primary as well as your secondary also. Now we understand why we trade in your stock market, because it can be easily converted into cash. That is your first point. Another one is it makes a lot of money. Also, it makes more number of profit into your stock market compared to the business, which is going to build a very conventional business, and we need more number of time period. That is your longevity of period which we are going to wait is higher in your trading, in your business. Again, compared to your trading, it makes more profit in your stock market. And the only thing what we have to do is we have to know about your basic things to be very clear regarding your stock market. That is stock market investments, stock options, IPOs, futures, and options, every put, call, everything to be understood very clearly. In this video, please keep in touch. I am going to explain to you very clearly about your the terms related to your stock market also, which will be more useful for you. Coming back to the stock market system, primary market is nothing but the market in which the sale of new securities is going to be done. That is, it is a new market in which the securities is getting to be the face value at a discount or at a premium, everything. And it can be take a variety of forms, that is your equity or your debt. So I think you have a clear picture of what is known as your primary market. Then comes your secondary market, that is nothing but where we are going to raise the capital by way of issuing the shares and debentures to the public. That is, through your public issue, you are going to raise your money. Why we want to raise the money through your public issue is the promoters, they will not be able to get the capital through the borrowings from the banks or from the financial institutions. So the easiest way is to issue the shares and bonds to the public, and through the public issue you can earn more number of money. So once this is done, the company allows the shares to the applicants as per the prescribed rules and regulations laid down by the SEBI. So what is SEBI? It is nothing but the Securities Exchange Board of India. It is a regulatory body for the stock market. We are going to discuss more into this SEBI also. That is, the SEBI is the regulatory body in which we are going to list our securities. So what is listing us? We are going to list all, no, not all the securities, only the securities which is having a high value, it will be listed in your SEBI. So the SEBI is the authorized person who is going to regulate your shares and bonds. So in your security, the difference between your primary and secondary market lies with the primary market are offered to the public for subscription for the purpose of raising the capital fund, but the secondary market is an equity trading venue in which already existing and pre-issued shares are traded among the investors. So please keep in touch with my video to understand more about your stock market and what are the terms which will be dealt in your stock market, everything. So thank you for your subscription and listening to my video. Thank you.